May be pre-recorded.
The airing of this program by this station is not an endorsement or recommendation by the station of the products or services discussed in the program. The station does not guarantee the results of any investments made by a listener to this program.
The Word on Wealth with Gary Quackenbush is sponsored by the Word on Wealth Radio Network.
This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary is a San Diego financial solutions attorney, protecting people like you. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future. Now, here's Gary.
You're live. Happy Wednesday, everybody. You know this is one of my favorite days of the week. Wednesday is my favorite day because we have one of the great brains in California that knows everything you need to know about estate or about estates, like your stuff that's tied to your dirt, which would be your homes, your real estate. I have my show partner for Wednesdays, Ken Pecus, on the line today. Ken, how you doing, man?
I'm doing great. I like the greatest mind in the world thing. Can we go with that?
We can totally do that.
Cool.
Ken Pecus teaches us. No, see, you know, and I say that in all honesty, because I'm an all honesty guy, because I know lots of real estate professionals. You can imagine as an attorney, an estate planning attorney, I get at least 3 emails a week and at least 2 pieces of mail, probably 4 pieces of mail a week from real estate professionals saying, hey, I noticed you have a case in probate. We'd love to sell your client's home. And I go, okay, great. I get that all the time. So I just know a lot of people in real estate, and there are very, very few that I trust. And one that I trust is you. And that's why I have you on the show, man.
Well, thanks. I'll just give you a little, but that was awesome. Thank you.
And it's true. I know that should pep you up. Your head should be, too bad you're not on TV. It's Ken. You don't blush anyway. You're just dead on. Real estate animal. So, but you guys, seriously, with Ken though, he's helped my family personally. He's helped me personally. He's helped my brother buy real estate like all over San Diego County. It's just been an absolute, just a gem to work with. And as I was talking to my producer, Tom, he asked me yesterday, he said, Gary, why is Ken successful in every market? When something happens, you know, all these realtors are like, oh, the market, something changed. And then Ken's like, yes, another change, another opportunity. I said, Tom, that's just Ken. That is just Ken. So I do have questions. And if you want to get a hold of Ken, by the way, he is the founder of the Pecus group at eXp Realty. The easy way is Ken at Ken Pecus, Pecus.com, Ken at KenPecus.com. And we have his phone number, which I use, and I call him whenever I feel like, even when he's on vacation and he answers it. That's his problem, not mine. 619-977-8419. I want to know 2 things. One, I'm going to ask you about your seminar and how that went, because I know you were the real estate guy at the seminar on the 14th. And then the other one was, we got to talk about these bank collapses. You know, it was interesting, you know, you Silicon Valley Bank, as soon as it happened, I knew about it because I got an email from, 3 different institutions that I deal with. The reason you're getting this email is because the collapse of Silicon Valley Bank and Signature Bank have nothing to do with you. You're not affected by them. And I'm getting these emails going, oh my gosh, something really happened. But I got them from like 2 or 3 of my banks, my investment advisor, all these different, they're saying, oh, and I even attended a seminar, you know, and online yesterday at 7:30 in the morning. And they were doing, you know, one person was on vacation somewhere in some country, but it was like this crazy stuff. And you think, oh my gosh, the sky's falling. I know it is. The sky's falling. And then I get a text from Ken. Hey, the market's good. It's good. So how did you do at your seminar last night? How did that work out? And then let's talk about the bank collapses and how it's going to make real estate good.
All right, so seminar last night was actually pretty good. We're over at Ale Smith, maybe give or take around a little over 30. I think normally you have like between 50 and 60 people, so rain was a little dampening. It was good, and I was able to get across to a whole bunch of people I didn't know in person, you know, just where the San Diego market is in general. And that seminar was actually created about a week ago, so a week and a half ago, in terms of, talking points. And obviously in the interim, this interesting financial situation has occurred. And so I was able to go off track a bit, and I was able to go right into a little bit of a conversation here and bring the whole banking issues into context of home ownership, buying your first home, your fears, all that sort of stuff. And I'd have to say it was really well received, and I kind of want to just go that route with you today.
Oh, that would be great. No, I think that's perfect. Let's do it. Let's do
Cool.
it. Talk about these bank. It's just so interesting. I mean, on my Friday show, my Friday show is basically is Finding Joy Friday, and we have therapists and mental health professionals come on, and what we're trying to get somebody on in the next couple of weeks to say, how does this affect people emotionally when all you get is this crazy, insane news, and then the sound bites just pick up on it, like it's like, oh my gosh, this is the world is collapsing.
Oh, yeah.
But it's just not that way. So talk us through this. Talk us through the Silicon Bank and how that's going to make real estate even better.
Right. I think the best thing for conservative-minded, financial, intelligent people, and that's what I'm thinking the listeners out there are, because that's what they're listening to these shows day in and day out, because they're data gathering. So for people that are trying to be intelligent about how they go, the first thing you do is don't panic. And then the second thing you do is look around and you see if people are panicking. And if people are panicking, you have to pay attention to what Mr. Warren Buffett says.
Mm-hmm.
Be greedy when people are fearful. Be fearful when people are greedy. That's not the exact words, but that's the context.
Mm-hmm.
So right now, when there's so much uncertainty in the air and people panic, whatever, you need to take a step back, evaluate what's going on, figure out whether or not there is an avenue for you to move forward within the avenue. You have to look at, see, and check whether or not you have to protect yourself. But the biggest thing is, usually when something like this is going on, it's disguised
2 minutes.
A gift. And for property ownership, this happens to be, I believe, at least for the short term, because I don't know what might play out. I think for the short term, there is a gift here. And so that's what I want people to kind of focus on, because I'm going to assume it maybe in your past shows, the details of how Silicon Valley Bank, Signature Bank, and before that, right before that, Silvergate, all these failures and wind downs have happened. And most of the listeners pretty much understand it's directly related to the bond purchases, the cost of inflation going up, the interest rates going up, and the bonds being undervalued when they did a run on the bank, right?
Mm-hmm.
Pretty much everybody who's kind of paying attention to this understands that part. And they're going to start debating, was this the 2018 change of Dodd-Frank? We're going to hear ad nauseum about how this happens, how we're going to protect it, where we're going to go, all that sort of stuff. So
1 minute.
Let's just put all of that aside for a minute, and let's get first basics. Basics, anybody that has less than $250,000 in any account, you are FDIC insured, and everything that happened in the Great Recession, I don't know of a single person that was under the FDIC insurance limits that lost any of their money. So for the vast majority of people, they have their accounts spread out. You're all protected. You can now concentrate on where we can go from here. Is that fair enough?
Absolutely. Yeah, and I think that's some of the stuff, the basics that we have to not fear, and we have to kind of look past some of the hype and some of the crazy news and some of the inflammatory stuff that we're hearing, and just look past, and yes, have some security in the fact that we do have FDIC. We are in the United States. The Dodd-Frank, we're going to be hearing about all that. I do want, we're going to take a really quick break. When we come back, I'm going to have you keep explaining how this is good for the real estate market and the time to jump in for a lot of people. We've got Ken Pecus, founder of Pecus Group, Ken at kenpecus.com, right here on the Word on Wealth. Stay tuned. We'll be right back in a second.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQlaw.com. You're saving and investing for the future, and that's good. Have you ever stopped to think, where does my money actually go? This is Faith-Based Investing with Anthony Wright.
Most Christians just don't understand that the money they save for retirement usually helps fund the abortion industry and other liberal anti-family causes. But did you know that with just a few minutes of your time, we can screen and clean your investment at no cost to you? It's absolutely complimentary. Just go to the website right now, download a free copy of my book, Faith-Based Investing. It's free as well. You deserve to know the truth as the investor. Then the choice is yours. You can keep doing what you're doing, or you can line up your investments and life savings with your beliefs. We are fiduciary investment advisors. You can feel good about investing with confidence. So learn more now. Go to BibleSafeInvesting.com or call me at 931-RETIRED. Your free book is waiting for you. Go to BibleSafeInvesting.com and be sure that you listen to Faith-Based Investing this weekend right here on Family Talk.
So Gary, we've talked a long time about estate administration. So what is that and why is it important?
Estate administration is the distribution part of estate planning. So when someone passes away and they leave money to beneficiaries, the property has to be administered. So it's like taking it from the decedent to the survivor. That's called the estate administration process. So usually you're going to have a successor trustee that's named in the trust. They'll have no idea what they're doing because they've never done it before. So then they call on GQ Law and we walk them step by step on how to be a successful and good successor trustee. We also do the required notifications. We notify the Department of Health Services and all the legal requirements so that they can have the estate administration done properly. We help successor trustees be successful.
Call or click to request your free consultation. GQlaw.com, 855-500-TRUST, GQlaw.com.
Tell a friend about this broadcast outreach, The Word on Wealth, with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST, GQlaw.com.
Hey friends, welcome to The Word on Wealth. We are here with real estate expert, the big mind here in Southern California, and that is Ken Pecus, the founder of the Pecus Group at eXp Realty. His contact information, Ken at kenpecus.com. Pecus is spelled P-E-C-U-S. Okay, so Ken is in the middle of explaining, and I'm not going to interrupt him this time, explaining how these things you hear about, bank failures, meltdowns, and all these alarming things that just sound so awful, how that helps the real estate market, especially in the short term, because there's been some really interesting developments and some coming up. And Ken is going to be talking about that. Go ahead, Ken.
Great, thanks. So if I sound too excited about it, that's not a insensitivity to whoever is going through some trauma here. So I'm strictly focused on where there's opportunity. So I don't want that misread too much, but I am excited about this. So first of all, last week, the employment numbers came out and they were really strong again. 311,000 jobs were added. It's still defying what's going on. And the unemployment holds at a 53-year low. That is going to be an indication because, as we spoke last week, the Fed is meeting again on March 21st, and all indications were that the Fed was going to raise the short-term rate 50 basis points. So, the mortgage market started pricing what was about to happen. And then yesterday, the CPI came out, and which was very timely also, and inflation has adjusted a little bit lower as expected, although the core inflation, when you take away the food and things like that, actually ticked up from January. So I think that had nothing happened with Silicon Valley Bank and Signature Bank and everything, we would be looking at probably a 50 basis point increase when Jerome Powell announces on the 21st, followed by additional price increases from the Fed. But because of this, right now, it would be almost malpractice for the Fed to raise the discount rate any more than a quarter, maybe even just holding it firm for at least a month or two while they evaluate this unintended consequence of figuring out which banks besides Silicon Valley Bank or Signature or any of the other banks have done in bond investing the way they did that are so reactionary to inflation pressures, especially with the Fed rate going up. So at very least, I think they're probably going to pause. I mean, we'll all know about it in a week, right?
Mm-hmm.
So we'll know about it next week, but it doesn't seem logical that they're going to do it. So that's what I thought as soon as Friday came around with the bank collapse, and as soon as Sunday, and they put the other one into receivership, and I'm thinking, well, I don't see how the Fed's going to move forward. And now if you look at pretty much all the business wires, talk to people, whatever, I think there's a bit of that conversation that's starting to happen, probably a lot more than a bit. But the mortgage market has already seen that and is starting to price in on the mortgage. So just in the last 2 days, mortgage rates have gone down to right now 30-day lows, but I wouldn't be shocked if they continue to go down a little bit more, because people don't understand sometimes that the Fed rate and the Fed funds that they're doing short-term interest to their best customers, the banks, that's not mortgage rates, but it's all tied together. And the mortgage rates that banks and financial institutions offer out there are always a reflection of how expensive that money is. So I think most banks and most mortgage institutions had already priced in what they assumed was going to be another substantial Fed raise on March 21st, especially after that jobs report came out. Because I don't know why, but the best way to see whether or not there's an issue with their inflation, whatever, is to have people losing their jobs. I know that sounds silly, but it's the way it seems to the general public, I think. So in that case, we've already seen the mortgage rates tick down. And in that respect, we've already seen people noticing that and people starting to submit mortgage applications. Now, we're not talking about refis, because most of the people that are that have bought last year, they're not looking to refi yet. But in terms of the normal spring market and what's going on now, it's, you go down 0.5 to 3/4 of a point in a mortgage rate. That's some substantial buying power, and that gives momentum to the existing housing market, not only in San Diego but across the country. So that's one way that this is going to affect the housing market in a good way. But I think if you step out of this for a minute and you look at housing and how the housing market reacts in relationship to the securities market and in this case, potentially the banking, because this banking is affecting the securities. Because I don't know if you saw the stocks, it says the Dow is mixed, but a lot of things are getting hammered. I think Berkshire today was down like 3%. I mean, Berkshire, that's a unnecessary reaction by the market.
Yeah, especially Berkshire Hathaway, because they're into a lot of real estate too. They're just funny reactions because it's a surprise. I mean, Anthony Wright, our financial expert that comes on Thursdays, his thing is he said the market anticipates these things and kind of moves in anticipation of, Jerome Powell coming out on the 21st and these numbers coming out. But then when this, Silicon Valley Bank and Signature Bank failures come out, that's kind of like sweeps their feet out, and then the market has to react, and it does some funny things. Interesting.
Exactly. Well, it's exactly it, because I think what Anthony would probably completely agree with me in that not only is it is this going to be a great opportunity for people are liquid to really go shopping? There's probably some securities they can go shopping for in addition to real property. And so this is a great opportunity if everybody keeps their wits about them and realizes what's happening, right?
Yes, absolutely. And we're talking with Ken Pecus, and you, as I've told you before, Ken Pecus knows everything that we need to know about real estate. And we're wondering, why is Ken Pecus different than others? You realize, don't you, listeners, we're talking to a realtor, a guy that does real estate for a living. He knows, you can hear him talking. He knows more about the market and literally the financial markets and bonds and all these different things than most people do, even though they're not in the industry. So this is what's good stuff. And I know we're all listening up intently going, wow, how does this really affect? And, you know, how does Ken know all this stuff? But for your real estate needs, it's Ken Pecus, Ken at kenpecus.com. Okay, Ken Pecus, keep going. So we've got, you know, I get we're saying, you know, the market is kind of going, okay, next Tuesday, the 21st, the Fed's going to come out, and they've already kind of gone, you know, kind of hinted at, you know, 5 basis points increase because we're trying to chill the inflation or chill the economy, reduce the inflation rate. Then you get these different numbers come out. The CPI comes out and it's mixed. And then all of a sudden you have this surprise thing comes in, and we're expecting, wait a minute, Jerome Powell can't come out and say 5 basis points. He's going to have to say 0 or, you know, 0.25 or something like that. So there's got to be some change. So the market's a little bit hesitating, but what it's not doing is it is not increasing rates, and we can't expect that rates are going to increase. Therefore, you jump in. Now, here are my specific questions. Market timing and all that is specifically like, so I'm like a first-time home buyer. I'm kind of thinking about it. San Diego prices seem high. The rates are kind of moving all over the place. Is this the time where I now say, you know, I've been looking, but I'm going to get serious right now and really look and try to get locked in?
I would totally do that right now, because I think there's also some in the mortgage and banking industry that are saying that, hey, this is the beginning of when rates are going to start coming down. And I don't believe that for a minute right now. I believe this is going to be a temporary stall here unless the economy goes into a much bigger tailspin. Because what I believe is going to happen, the FDIC and the Treasury, you've probably heard it already. They've created overnight the Bank Term Funding Program, right? Mm-hmm. Well, that term funding program that's going to give all these banks, regional banks, whatever, on par for their assets, a up to 1 year loan is going to prevent those banks from if somebody tries to do a run on them, it's going to prevent those banks from having to do what happened with Silicon Valley and sell those bonds at a discount. So there's probably, unless there's something, you know, maybe crypto based or whatever, there's probably not going to be some dramatic, maybe another bank or two failure, but I don't think it's going to be systemic like it was in 2008. And this failure is definitely different in how we're looking at it, because the 2008 one was kind of based and originated in real estate, where this one originated technically in the banking industry itself and how they invest and return money. Right. If you want to tie what's just happened, I would tie it to real estate. I would tie it to the 2000 NASDAQ collapse. Mm-hmm. Okay. When NASDAQ collapsed, everybody was freaked out. I mean, it went in half almost, right? Or maybe whatever. And because all those .com, it was the .com bust, mm-hmm. because they were the overinflated thought processes. And once again, it was really high tech that busted NASDAQ at that time. Right. This is high tech that's pulling back Silicon Valley. It's the same thing. Right. But if you look at 2000 and see what happened, investors got insecure about the securities market and they started pulling a lot of money and they started investing it in real property. Exactly. So if polls, I actually think there is going to
2 minutes
of investment money, even more investment money into real property, which now or in the you know, as you watch, when you feel confident, now's the time to invest in or continue to invest in real property. If you want to con this thing, go back to 2018. And when they did pull back Dodd-Franks, when Silicon Valley was only a $49 billion company before they pulled Dodd-Frank back, and now it's, above 200 billion, or it was. As they pulled those regulations and all that venture capital money started feeding in, so that Silicon Valley is now 400% bigger than it was at that time. The real estate market, and especially the high-end real estate market, was almost paralyzed. And that was nationally. That was Manhattan, that was South Florida, that was LA, that was San Diego.
1 minute.
High-end real estate market was almost paralyzed. Nothing was happening, even though we were in a real estate recession. The overall appreciation, nobody was money out of.
See, and that's what, so we're talking with Ken Pecus of the Pecus Group, the founder of the Pecus Group at eXp Realty. He knows his stuff. That's why, Ken, I just really appreciate you being on the show and being a partner with us on the Word on Wealth. And I told you Wednesday's the day we get smart about real estate, because we've got Ken Pecus. His phone number, if you want to call him right now, I mean, seriously, get into it. If you are thinking about buying, now is the time. Take advantage of this thing. I know some people are going to be suffering and hurting from it, but don't you suffer. Get into the real estate market if that's what you're intending to do. Ken's number is 619-977-8419. 619-977-8419. That's Ken Pecus, founder of the Pecus Group at eXp Realty. Personal endorsement. Ken is awesome. Give him a call. Get into your real estate. Talk to him about how that's going to work. We'll be back in just a second here on the Word on Wealth Radio.
You don't need to know everything. You just need to know where to find answers you can trust when you need them. Welcome to the Word on Wealth with Gary Quackenbush. We are here to help you build, protect, and transfer everything you've worked hard for with expert estate planning, trust administration, inheritance, and probate. Call Gary and the team at gqlaw.com. 855-500-TRUST. You're not alone. Ask for the legal help you need. Call Gary and the team at GQ Law, 855-500-TRUST, or go online and download Gary's free ebooks and videos. Read Gary's blogs. Call or click to request your free consultation or to talk with a member of the GQ team. That's gqlaw.com, 855-500.
You're live.
That was a great conversation with Kenny Pecus, right? I think it's very interesting. You take somebody in every industry, and some people in different industries are so into it and they understand so much about the industry, the ins and outs, the ups and downs, that they can they can kind of predict what's going on. And, my experience with Kenny has been just that. We were working on a sale of a piece of real property, and it was when the market was just like screaming. It was like super high trying to sell. And with the market changing, there's a lot of things happen. And over the time that we were in escrow, I would think it was interesting because every time there was a change, every time something happened, Kenny had a really, an excellent explanation of why this happened. Don't panic. This is okay. This is not okay. Let's work with this. And he's just a very hard worker. Ken was talking to my team this morning, about his, him being a partner in the show, which is just super exciting. I'm just so glad to have him, as a long-term partner on the show, as our Wednesday real estate guy. I think that's fantastic. And we're just really, really proud to have Ken on our Word on Wealth team. I was talking to my producer this morning, and he was asking, like, so why is Ken always up? When sometimes you have the real estate market does weird things. You got realtors that are, bemoaning the fact that rates are moving around, or the market is unstable, or prices are moving up, or whatever. And then they just feel like, oh, I can't sell anything. And they're just not successful. Well, with Ken, what we have found is that there's not a time when he is not successful. And I'm not talking about just like, oh, yay, house prices are going up so that I can make more money. His attitude is, yay, house prices are going up, they're going down, the interest rates are going up and down, and this is how it affects you and your investment, and this is how it's going to work out. And you go through the numbers with him, and it's very encouraging, and it's actually inspiring to work with him and figure out what you're going to do. I did not have a chance to talk to him about this, and we will coming up in future shows. Is this housing market, if you're thinking of buying or selling, it's the time to do it, because things move, and you can, if you work with the right agents, if you work with a professional that really understands it, it is a lot less daunting a task to sell a piece of real property or to buy real property. And as you can see with Ken's knowledge and understanding and his thinking, he thinks about this stuff all the time. That's the kind of person you want on your team. Not somebody that's just like, oh, I got into real estate because I can make huge commissions if I just sell 1 or 2 houses a year. Ken is building his team constantly, because he's got agents that are they're awesome at what they do. They know what they're talking about. And you've got Ken, who knows all these things about the financial markets and the housing market and the mortgage market. There are companies, as you know, there are some of the biggest mortgage companies in the United States folded up their tents within the last 6 months, because they thought, oh, we can't make money doing mortgages, we're going to go into something else. And that happens. And there's some personal friends of mine that were kind of, victims of that one. But then, you just have to get the right people, to get the right agents, to get the right mortgages and all that. There's, the mortgage industry and the real estate industry work a lot of times hand in hand. You got to get somebody that's really good, that knows the ins and outs, that have done it for a long time. Anyway, couldn't enjoy that more. That was a lot of fun talking to Ken. I want to go into a segment that I call tough questions. What are the tough questions that you have to ask? What are the tough questions you want to have answers to? If you do have questions regarding estate planning, wills and trusts, if you're a beneficiary, if you are a trustee, if you're trying to work through some questions that you have regarding these things, then call us at 888-344-1170. So my first question, and these are things you don't even want to have to ask the question, but this is reality, folks. What if the successor trustee is not doing their job? Okay, so let's say, for example, mom and dad have both passed away, and sister is the successor trustee, and you just don't think she's doing her job. She can't be doing her job. You know that before mom and dad passed away, you know that they had a bank account, because dad would tell you periodically, yeah, the savings rate at this bank is this, and they had a rental property, or they have their home. You pretty much know what your parents have. If you're just in relatively consistent communication with them, you pretty much know what they have. And yet mom and dad had passed away. It's been 6 months, you've heard nothing. It's been 12 months, you don't see anything going on. All is quiet. That is not a good thing. After mom and dad have passed away, and things are not happening, there's no movement, that's not a good thing. So if the trustee's not doing their job, that's not an uncommon thing. There's actually a probate code sections. We call it 17,200. It's 17,200, the probate code. And that's the section that says basically in that section, it deals with successor trustees who are not doing their job. And you can go to court and do a couple different things. 17,200 petition can be to basically say, I've asked for an accounting. I've asked for how much money is being spent. I asked for how much money is there. No, she's not talking to me. And I've asked her twice over the last like 8 months, and I'm getting no response. I'm getting an email saying, don't worry about it. I've got it under control, but I'm not getting any documentation. I'm not getting any numbers. I'm not even getting shown anything. Well, that's not a good thing. The successor trustee has a fiduciary duty to protect the assets of the trust and to watch out for those beneficiaries. So if you're not getting that information, then you go to court and you file a petition that says, I asked for an accounting and I gave her 60 days. I asked for a second accounting. I asked a second request, no response. It's been 60 days since that one. I'm waiting. I don't believe she's doing her job. I'm worried because there's a rental property and it's vacant. I'm worried because there's a car and is it insured? And we just don't know what's going on. What you try to do with one of those petitions is you can say, I want this successor trustee suspended or removed so that the next one in line, which may be you, that next one in line can serve. Now, if somebody comes after you with one of these petitions, the response is to do an accurate accounting. When you are responsible for somebody's estate, you have to do an accounting. You've got to get the returns done that are necessary, and you got to put together everything that's being spent on what, and you got to account to your beneficiaries. Okay. So if you're not told what's going on, that's going to be one of the same things. It's like, you're not doing your job. I have to get somebody to do the job right. That's the 17,200 petition. If you're not being told what's going on, I want an accounting. So you can do multiple things in a petition. I want an accounting and I want the trustee removed, especially if you're worried about the trustee doing something wrong. Real property, are they going to lose the real property? Well, maybe if it's not insured, or if there's no fire insurance on it, or it's in disrepair and you're thinking, oh no, the rain's coming, it's going to be flooded or whatever. If there's some danger to or risk of loss of the estate property, then yes, petition, you can do a petition. Now, it may not be that that's what you do immediately. Maybe it is. It just depends on how bad it is. We do that type of work at GQ Law. I'm happy to talk to you about it. The number is 855-500-TRUST. Just give me a call. Let's get on calendar. Let's talk about it. Initial consultation for my listeners. You've got to tell them you heard me today, that you want a free initial consultation to talk about it. If you're a beneficiary or if you are a trustee, if you want to do something about it, if you want to talk and see what your rights are, that's what we are all about. If you don't want to call on the radio and ask the question, I understand, but make sure you call me 855-500-TRUST. Okay.
2 minutes.
What if the beneficiary is just not getting anything? Like literally, you don't even have a copy of the trust. You don't have a copy of the will. You really don't know what's going on. And the trustee flat out is just ghosting you, not responding to anything. How do you, first of all, know that they're the successor trustee? What if you don't even know? I've had that situation. I'm asking, who is your dad's successor trustee? I don't know. It might be my sister or my brother or my other sister, but it's not me. Okay. What about the other siblings? Are they talking to you? No, nobody's talking to me. I don't know what's going on. So who do you go after? Who do you petition the court to have them removed or talk? Well, that's still going to be the probate code, because the probate judge can order them to provide a copy, order them to provide an accounting, all these different things. And the judges, they don't mess around. When it's dealing with somebody's estate, that person passed away, they left money to their beneficiaries. It's supposed to get to their beneficiaries and they're not doing it. The judges don't like that. They don't want to mess with it. They will issue orders to remove a trustee. They'll issue orders to, whoever's got the trust has to disclose it. So there are ways to push through those things. And the risk that we usually help all the beneficiaries and the successor trustee who maybe is doing a terrible job or doesn't want to do their job or whatever, we're really good at letting them know what the circumstances and what the consequences are. Explaining to them, you've got to move forward or else you're going to lose your estate. You're going to lose your inheritance. You're going to cost a bunch of money. And we do that and we explain to them, this is how it works. Please respond. Let's move forward. Let's get this resolved. I mean, I'm into keeping things together. I want to keep the family together if we possibly can, but I don't like it when people are not getting their money that they're supposed to. This is the Word on Wealth with Gary Quackenbush. Now, what I want to talk about coming up next is, can you question a trust? Can you challenge it and not be disinherited? That's a great question, and we'll answer that coming up next here on the Word on Wealth.
You've got questions. We've got answers. This is the Word on Wealth with Gary Quackenbush of GQ Law. Gary's here to give you peace of mind with expert estate planning, trust administration, inheritance, and probate. Call Gary to build, protect, and transfer your wealth. 855-500-TRUST. GQLaw.com.
Gary, your team at GQ Law are experts at solving IRS and state tax problems. Talk about that.
When people have a tax problem, it tends to really stress them out. And one of the things we've been able to do is figure out how to resolve tax problems. One thing we might be doing is setting up a payment plan or getting a collection delay, maybe getting a determination that the person shouldn't have to pay the taxes at all. We do offers and compromise. We do audit reconsiderations. And one of the things that's a really powerful tool that some people don't recognize is sometimes bankruptcy can be used to actually eliminate taxes when there's certain conditions of the code that are met. So we can do all kinds of things. After we analyze your situation, we can figure out what's available, discuss your options, and figure out which ones to implement, what it's going to cost, how long it's going to take. And we can get people out from under all kinds of tax problems so they can sleep again. That's our goal.
Request your free initial consultation. GQLaw.com. 855-500-TRUST. GQLaw.com.
What
Tell a friend about this broadcast outreach, The Word on Wealth with Gary Quackenbush of GQ Law. Call or click to request your free initial consultation or to talk with a member of the team. Call Gary at 855-500-TRUST. GQLaw.com.
Go ahead. Hello. Welcome to the Word on Wealth. This is your host, Gary Quackenbush. If you got a question, give me a call, 888-344-1170. I'll answer it. We still got a little bit of time. We're going right to the top of the hour with your questions and with the information that we're providing. So if you got questions, let me know. I do want to keep you up to date that we talked today. It was our Wednesday day for real estate, and we talked to Kenny Pecus of the Pecus Group. And he is our real estate expert with us on Wednesdays. On Thursday, you all know Anthony Wright, Bible Safe Investing, investing in real property. We're going to be talking about the Silicon Valley Bank collapse and the Signature Bank's failures and see how that's affecting the market and what you should be doing with your own portfolio. Anthony will be the expert to talk about that. That's coming up tomorrow here on the Word on Wealth, same time, same stations. And then on Friday, we have our Finding Joy Fridays, where we have mental health professionals come on and talk about finding joy in the midst of chaos, in the midst of bank collapses. And so that's going to be a lot of fun on Fridays. We always really appreciate you listening up and calling in with your questions on our Fridays as well. All right. The question that we're answering now is how we've all heard about a no contest clause, right? You know, you put in your trust, it says if anybody contests the terms of this trust, then they are to be treated as if they died before, you know, the trustors, and that they had no children or grandchildren. And so the idea is if somebody contests, they get nothing. I mean, the old school way we should do it was, it would say, you know, if you contest this trust, you get $1. And then we started saying, well, you don't need to give them $1, because the old rule was you had to give them something, at least to acknowledge that they got something. And then the rule was, well, why do that? That seems silly. You can just disinherit them. Well, now the big question is, what is a contest? What does it mean to contest a trust? What do what things do you do? What actions do you take that trigger the no contest clause? And in California, it's much more difficult than it used to be. It's from the person that's contesting, it's easier to contest, especially old trusts. It's easier to contest the no contest, the trust with the no contest rule in it. So let's say, for example, it's an old trust that you have, and it says, you know, if anybody contests this trust alone or in concert with another person or initiates any litigation, you know, to determine the validity of this trust, then they are disinherited and to be treated as if they died before the trustors did, and they died without any issue, which means no children or grandchildren. That's a pretty typical no contest clause. So what happens then when somebody's trying to figure out, well, I think that the person that drafted this trust was incompetent. I think they did it. They were under duress. I think they were isolated. I think they were forced into it. I think they were influenced unduly and wrongly, so that they wouldn't have made that decision if it weren't for this influence. Now, influence is one thing, but undue influence is another. So if you're challenging a trust based on what you believe is information that you have that would show that the trustor, the person that set up the trust, would never have done it had they not been forced or pushed or cajoled or pressured into doing it, that's not a contest, okay? You're not challenging whether you should be the beneficiary or the trustee, or you should get money, or how much you should get, or what percentages, or where the money should be withheld. You're not challenging that. You're actually challenging the validity of the document itself. Now, there are ways, you have to be careful. You got to get an attorney who really knows what they're doing, and you can carefully go and contest a trust, meaning you're contesting the validity. And there's some other things, but it gets really technical. You can contest a trust without being disinherited. Okay. From the other side of it, if you're the person creating the trust, you want to be careful and make sure that you have a new disinheritance clause that speaks directly to the fact, if you do this is a contest of the trust. If you do this, A, B, C, D, E, if you do it alone or in concert with other people, these things all constitute a contest. And if you do any of these things, you'll be disinherited. You'll be treated as if you died before me. That's the no contest clause you want. When should you do that? Well, if it's not already in your trust, then there may not have been a need. But if you have things in your trust that are other than like I have 4 children, and when I die, I want it to go to my 4 children in equal shares, those trusts are kind of hard to contest, because that's what would happen if there was no trust. So if there were no trust at all, if it would go to your 4 children, and your trust now says, I want it to go to my 4 children, you're basically following what what legally would happen if you had no will or no trust or anything. It's just you're going through a trust, so it's cheaper, faster, more organized. It can be done without so much hassle and agony and all that. That's why you did the trust. If, however, you're doing a trust and there's some really big adjustments in there, like, of my 4 children, I want one of them disinherited, or I want to jump them and give it to their children, or I want to give one kid 5% and then the other 3 kids the 95%. Those are things that I say are not, quote, natural, because natural is equal shares to all of your living children. So in that case, when you're doing something that is not like natural, then you need to have a stronger disinheritance clause, a stronger no contest clause. Okay. If also you have a blended family situation, you have husband and wife, and they maybe have their own children, but maybe husband or wife or both have their own child from another relationship or another marriage. Those are going to be times when you're going to have some potential issues because, as you know, when whichever one dies first is going to make a difference on how money would go. The trust controls all that. So if you have the husband has one of his own children and two with his wife, the wife is your mom, husband dies, what's going to happen to husband's kid, right? Is money going to go directly to husband's kids? Is it going to be held on the side? What's going to happen to it? So those are things that might cause a trust contest. That's when you got to make sure that the trust has a no contest clause that is strong and complies with California law. I would venture a guess that if you did your trust more than 5 years ago, that your no contest clause will be outdated. So if you have any questions on that, call me. Let's look through it, 855-500-TRUST. I'll talk to you about the need for it. Like, do you need a better no contest clause? And what does it take? And sometimes it's just an amendment. We amend the trust to add a no contest clause or disinheritance clause that should have been in there already. And I'm not saying that somebody messed up, but the laws have changed, and especially on disinheritances. If your trust is 10 years old and you got an issue with disinheritance, we got to fix it because it's not going to work. You're looking at old documents, like if your healthcare director was done before 2015, it's going to be outdated because the laws changed at the very, very end of 2014. So in 2015, the middle of 2015, we started catching up and going, whoa, here's these new laws that are all in place. So healthcare power of attorneys, you might be looking at, maybe you have a trust certification. There may be something wrong. So let's take a look at your trust. Let's get it right. If you do not have a trust, let's take care of it. Okay. Let's get your trust done. Let's get things worked out. Get your estate plan together. It is less expensive than most people think. It is easier to do than most people think. Most of my clients' response is, oh, that was easier than I thought. Oh, that didn't cost as much as I thought. I'm not saying it's free. I mean, it's a financial commitment. It is a time commitment, both of those, but it's not huge. My team has got it figured out to where we can get them done in 2 weeks. That's our turnaround time, our normal turnaround. You come in and see me for one visit. I got, both husband and wife here, whoever's important, and you're just going to be husband and wife together. Or if you're single, then fine, just you. And then we talk about it, exactly what you want, how the trust is going to be customized to fit your specific needs. And then we need 2 weeks to put it together. You come back in 2 weeks with your ID. We have it notarized, witnessed. We do copies, flash drive, all these different things. You make this really cool package that you get
2 minutes
shipped directly to you. So it can be done fairly quickly. Some of you are making your summer plans and you're thinking, oh boy, we got to get, set up for our cruise ship. We got to get our airfare. As you're thinking about that and you're clicking away, think, I'm going to be on a plane with my family. What if? And if the what if is, I have no idea because I don't have a trust, I don't have a will, I don't have power of attorney, I don't know who's going to be in charge, who's going to take care of my house if I'm gone, then those are the things you need to consider and get yourself an estate plan. I'm happy to do it. Our turnaround time is pretty quick. We're still got, slots open this week, not so much, but you can just call and get yourself set up, 855-500-TRUST. All right. So we had Ken Pecus today, real estate expert. Tomorrow, we're going to have Anthony Wright, financial expert, and be talking more about these bank blow-ups and how that affects us or doesn't affect us. Some of us are doing fine because of it. Others are struggling because of it. I'm not making light of, these bank disasters and the money disasters and things like that. I'm not saying we're all going to be bailed out, but we got to find a silver lining on things. We got to be realistic on, on what's going to happen. These are just things, they're reality, and it's expensive, it's costly, it's frightening. We're trying to make some sense of it to help you out with the real estate market. We got Kenny to do that for us today. Anthony's going to talk us through some of that tomorrow, right here on the Word on Wealth. Thank you for being a listener. Thanks for being a friend of the show. If you want anything, any legal help at all, we can help you out. Call GQ Law 855-500-TRUST. And I look forward to talking to all of you again tomorrow, right here, same time, same station. All right, signing off. This is Gary Quackenbush on the Word on Wealth.
Tell a friend about the Word on Wealth, featured since 1995. With financial solutions attorney Gary Quackenbush, an expert in estate planning, wills and trusts, and tax problem solving. Gary is past president of the California Society of Tax Consultants. Reach out to us. The Word on Wealth team of financial experts is here to answer your questions and help preserve your family's financial future.
The information you hear on the Word on Wealth is for general information purposes only. This program discusses general financial and legal topics. Seek legal advice from a competent lawyer for your individual legal needs.